Today I'm going to give you a quick update on TLT. In my last video on TLT back in August, I warned investors that if you owned TLT in anticipation of a price pop on the shares when the Fed cuts rates, you might be disappointed. And that's exactly what has happened. The Fed cut rates and TLT share price is now lower. You didn't get any pop on TLT. So let me provide you a quick update on what the true yield is on TLT after we account for inflation and taxes and what the outlook for TLT should be. The after-tax and inflation true yield on TLT is minus 0.59. How we calculate this true yield for TLT is to start with our dividend yield, which is 3.89, adjust for taxes that you pay, and then back out core inflation. U.S. core inflation has moved up recently. So we're losing more than 0.5% just by holding the investment. The blue line on this chart is the interest rate that moves TLT share price. That would be the 20-year Treasury rate. When the yield on the 20-year Treasury is going up, TLT share price is going to go down and vice versa. I've added to this chart the Fed funds rate. That is the rate, the short-term rate controlled by the Fed. That's the orange line. And what I want to draw your attention to is what happened in the 90s. This is the one and only time that we had a soft landing in the last 7 decades. And you can see that the Fed cut interest rates right here. And look at what happened with the 20-year Treasury yield. The yield went up when they cut. And then they cut again, and the yield goes up again. Now, I've also included 2 recessions on here, 3 if you count the pandemic, and that would be the gray lines here. These gray bands are recessions. Here we see the Fed dropping the Fed funds rate quickly, and we don't see a lot of movement with the 20-year Treasury yield. Look at what happens with the short-term rates, but the long-term rates, the 20-year Treasury yield, pretty stagnant. The same thing happened in 2008. The Fed is dropping rates all the way to 0, and the 20-year Treasury didn't react a whole lot. So here we are in 2024, and we can see that the Fed has dropped interest rates. We have a 50 basis point interest rate cut, and the 20-year Treasury, instead of going down, has gone up slightly. And that is why TLT price has gone down recently, because of the inverse relationship between the 20-year Treasury interest rate or yield and the share price on TLT. So let's sum it all up. The Fed cut interest rates by 50 basis points, and instead of going up in price, TLT went down. And the reason for that is that the 20-year Treasury interest rate has gone up slightly since the Fed cut their short-term interest rate. And I think that caught many people off guard. I think that there were a lot of people who were expecting an easy victory with fixed income in general, and were looking at investments like TLT and thinking, wow, I just need to buy this, the Fed's going to cut rates, and it's going to go up in price. But that's not what happened. And that was my concern back in August, where I warned people that if you were expecting easy money on something like TLT, you might be disappointed. Where do we go from here? It's really hard to say. The last 3 decades of data show us that there's an inconsistent relationship or pattern when we look at the 20-year Treasury interest rate and the Fed funds rate. I don't think we can draw a lot of conclusions when we compare those 2 interest rates. In the late 90s, there were some short periods where the Fed lowered their interest rate and the yield on the 20-year Treasury went up. And then in 2001 and 2008, the Fed cut their interest rate dramatically, and the yield on the 20-year Treasury responded only minimally. It was a pretty muted response. You didn't see a lot of movement on the 20-year Treasury yield. Then in 2020, during the pandemic, the Fed cut rates again, and in that time period, the 20-year Treasury went way down. So it's really hard to say what's going to happen with the 20-year Treasury going forward when analyzing the Fed funds rate. We have been told by the Fed that we could probably expect some more interest rate cuts in the future, But is that going to affect the 20-year Treasury rate? Really hard to say. So what do we get out of TLT? What we get is the yield. That's what we can grab onto. That's what we can count on. And the yield is negative. So I still think that this investment is a dog. You're losing money just to hold it, and you're hoping that the interest rate for the 20-year Treasury comes way down so that you can get some appreciation. May or may not happen. So I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.